I want to hit the top 5 tax strategies you should be thinking about and implementing by year end to save on your 2024 tax return. I'm Matt Sorensen. Let's build wealth. All right, coming in at number 5 is the health savings account. Okay, we all have a lot of health expenses, and it's very difficult to write off your medical or health care. However, if you have a high deductible plan, you can use what's called a health savings account. And for a family, you can put $8,300 in is a new contribution, and you can take a $8,300 deduction on your 2024 tax return for using that health savings account. Now, you must have a high deductible plan in place in 2024. This is why it's a year-end strategy. You can get the contribution in by April 15th, 2025, but you must have the high deductible plan in place in 2024 for at least a month. And by the way, there is a pro rata rule typically for HSA contributions, but if you get it set up with at least 1 month in advance, you can make a full year's worth of contributions for the HSA, getting in the 8,300 family or 4,150 single. Big saving strategy. Not only am I getting a tax deduction as I put the money in now, but I can invest that money and grow it, which you can self-direct. You could do stocks, bonds, or mutual funds. You could do real estate, crypto as the investment in the HSA, paying no taxes on the investment returns, building up the HSA. And then when you use the HSA to pay for your qualifying medical, it comes out totally tax-free, whether that's dental, medical, co-pays, prescriptions, no taxes on the way out. That is a huge savings for people. I love the HSA account, use it myself every year. Now, the next strategy is the home office deduction. Whether you have a small business, a big business, a side hustle, a rental property, you should be taking a home office deduction if you have an area in the home you use exclusively for your business. Now, there's a couple of different ways you can take the home office deduction. There's a simplified method where you take $5 a square foot up to 300 square feet, a $1,500 deduction for the space you use specifically in your home for your business. Now, I also want you to think of other things you're using in your business but not writing off. This could be cameras, laptops, cell phone. Maybe it's travel. Maybe it's your mileage as you're driving around for your business, whether there's a rental property or a side hustle, a big business. I don't care what it is, but a lot of people miss these easy deductions and this money they're expending, whether it's home office or some of the other deductions I mentioned. So make sure you get organized on that and are tracking that, because we want to make sure we get those deductions on your 2024 return. Now, the next strategy is the Backdoor Roth IRA. This is something that saves you on your 2024 return, but this is something that is going to increase the amount of money you can grow in a tax-free manner. Now, high income earners are typically restricted from putting in $7,000 a year into a Roth IRA, but you can do what's called a Backdoor Roth IRA, where you put money in a traditional IRA as a non-deductible contribution, and then you convert that non-deductible contribution over to a Roth IRA. This is the Backdoor Roth IRA. You can do that here at Directed IRA. You can do it at Fidelity. A lot of sophisticated advisors are hip to this structure. This is a great strategy to grow a pot of money, the Roth IRA, which we love, which can be invested and grow and come out entirely tax-free. So I'm not saving on taxes now, but I'm building this tax-free war chest that can grow and come out back to me tax-free. Now, coming in here at number 2 is buying an auto for your business by year end and taking advantage of 179 and taking a large bonus depreciation deduction for buying that auto. For example, let's say that you bought an auto in your business that you use 100% of the time. Maybe this is a truck in your construction company and you use it solely for business 100% of the time. For example here, and let's say that that truck costs you $50,000. Well, you can take bonus depreciation on that and take 60% of the cost of that, $30,000, as an expense and deduction now on your 2024 return. Now, you can take that deduction whether you paid cash to buy that auto or you got a loan to buy the auto. Either way, you get to take that deduction now in 2024. So maybe you can make this a December to remember and get a great tax write-off and a new auto in your business. All right, now coming in at number 1 here for you self-employed individuals with no other employees is the solo 401k. This is a specific type of retirement account you can set up as a self-employed person, small business owner with no other employees, where you can put in $69,000 a year in annual contribution. I can only do $7,000 in a traditional or a Roth IRA, but in a solo 401k, which I could do Roth dollars or traditional dollars, I can put $69,000 a year into this every year. It's a huge strategy. We use it for a lot of our self-employed clients. We set up thousands of these every year. It's called the solo 401k. Now, you got to be self-employed for this, selling goods or services or having earned income. And it doesn't work if you have a bunch of employees, because then you got to offer it to all of your employees. fees, but it's a great strategy for those self-employed with no other employees. It's a $69,000 contribution. If you do those as traditional dollars, you can have a $69,000 tax deduction in 2024. If you do them as Roth, you don't get the tax deduction. But again, I'm growing a war chest of Roth dollars that grows and comes out totally tax-free later on in retirement. So that's my top 5 to think about for year end. Make sure you're subscribed to this channel for more details on each one of those strategies. I've got a video on each of those strategies that goes into much greater detail. I'm Matt Sorensen. We'll see you next time.